Today, I want to show you how to identify bottoms. What I mean is price bottoms in the stock market. This is part 1. In part 2, I will show you many companies and give you a lot of illustrations. Why do we have to identify bottoms? The objective is that we want to minimize guesswork and we want to minimize risks. There are 4 types of bottoms: death bottom, crisis bottom, market bottom, and perceived bottom. The death bottom is near zero. It's a place of no return. The company is dead. Crisis bottom is very low, but it's above zero and it has a turnaround. Market bottom happens every day, every week, or every month. It's just a low point of oscillation for the stock. Perceived bottom is anybody's guess. You and I and everybody else has our own perceived bottoms. Let's talk about the death bottom first. When a company dies, when a company goes bankrupt, it can be slow or sudden. A slow bankruptcy is illustrated by General Motors. It's a big company, but the fundamentals of the company are no good. What are the bad things? GM is burdened by huge debt. They owe a lot of money to creditors and their employees, and they are not producing cars of the future. Their cars cannot compete. Now, bankruptcy can be very sudden, and it comes as a shock. Examples are Bear Stearns and Lehman Brothers during the financial meltdown in the summer of last year. So they are just the casualties of the current financial crisis. Those were the big companies, but when we're talking about small companies, it's very hard for us to tell whether small companies can survive through a tough business environment. They can collapse anytime, simply because they don't have enough cash, they don't have enough resources to help them through. Crisis bottom. In a general crisis like this one, the current one, worldwide recession, we know that all the stocks have come down to a crisis bottom. Now, this is the crisis induced by the general recession, and some come down much more than others. Even during good times, we know that different companies have their own crisis bottoms, because different companies have their own different problems. And a crisis bottom looks like a death bottom on its way down. You have to be careful, because a crisis may turn out to be a death. Now we come to the differences between a crisis bottom and a death bottom. For a crisis bottom, we know that the company fundamentals are sound, so that it will enable it to survive. The stock price hits a low point, which can be very low, but it only hits a low point for a very short time, and then you can see a turnaround quickly. And after the turnaround, the price will stabilize and sometimes give you a small ascent. The small players can never know in advance what the crisis bottom is, because what they do is to read the reports, which are usually out of date, and the reports don't show the company's fundamentals that well. However, for big players, all they need is to pick up the phone or talk to the top executives who are their friends and pals, and they will find out everything about the companies, their cash holdings, etc. And if they are sure that the companies can survive, then the big players will try to move in they will try to arrest the crisis bottom when the price becomes very low. They are moving in and buy more shares at fire sale prices because at that time the price is so attractive. Market bottom. Market bottom is anybody's guess. It's just a low point in the oscillation cycle because stocks go up and down every day. It occurs day in, day out, and it all depends on your frame of reference. You can find those bottoms daily, weekly, monthly, and yearly. Perceived bottoms. So what I'm trying to advise you is that you don't try to guess. Try to eliminate as much of your own guesswork as possible. Try to look at the real situation. Don't buy when you smell a crisis is brewing. Don't buy when a stock is on its way down, because that can be a dangerous thing. You have to wait for the weak companies to die in a crisis and for the strong survivors to show. All you need is to have some patience. Wait and take a look. Look for a turnaround point from the crisis bottom. You just have to wait and see. Don't guess. And you only buy after seeing the turnaround and also the stabilization past the crisis bottom. Then that will be a good time to buy. Remember, you've got plenty of time to make money. Don't hurry.